Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He became very well known with his Quote the Raven articles on Seeking Alpha and also his Quote the Raven or QTR podcast. He's had on a lot of good experts like Bill Fleckenstein, Marco Hodes, other famous investors and traders, also short sellers. He also helped discover a lot of fraud with those Chinese shell companies years ago, the reverse merger takeover scams. Christopher Irons, thank you for joining me.
It's nice to be with you, Jason. How are you? It's been a very long time since we've talked, actually. Probably more than a year.
Yeah, it's over a year. I was actually really sick for the last couple of years. I couldn't do any long interviews. I'm feeling a little bit better now, so I'm starting to do some more long interviews again.
Good to hear.
Okay, so Chris, I want to get your thoughts on all the craziness going on with the Federal Reserve Bank with interest rate hikes, inflation, deflation. Do you think the Fed is intentionally trying to destroy the economy right now with these rate hikes?
I don't think that they're intentionally trying to. I think it's a case of they are behind the eight ball by a lot. And that's really always the case. They're too late to react, and they overdo it when they do react. So the right thing would have been for the Fed to continue to hike through 2018 when we had that tumultuous December and markets crashed and, all of a sudden the Fed got scared and said, look, we're not doing this anymore. The right thing would have been for them to continue to hike through 2018. And that way, when the pandemic happened, we would have had some room to do slightly less quantitative easing, which would probably give us less of an inflationary problem than we're having now. But the Fed is reactionary and they're scared and they're cowardly. And so they're just like that overzealous friend that you have that always takes the joke one step further than it needs to go in public. They just overdo it, no matter which direction they're going in. They're too late to respond when inflation starts to, the problem with inflation is if you wait for the CPI to pop up and then you try to adjust policy accordingly, you're already way behind. The right thing would have been to have some semblance of normal monetary policy leading up to, the point where CPI took off, and, to try to kind of stave it off, and take precautionary preventionary measures. And they just don't have that they don't have the depth. I don't know. They don't have the backbone. They don't have the spine. They don't have the thinking necessary. And this nonsense about they have models and they have charts and graphs and things that kind of guide their policy decisions, it's complete nonsense. It's total bullshit. They make their policy decisions basically based on massive, easy to read kind of indicators that are so grossly out of whack that they bludgeon you over the head with them. Like if the stock market falls 25% in a week, that's something that, they understand. Okay, market down, too much, too fast, bad, and they react to that. If CPI, and they have this bullshit 2% CPI target, but if CPI comes in at 8% and the target's 2, well, that's four times our target. That's bad. So they're like toddlers, they just respond to these insanely obvious clues, and they do it too late, and they go too far in the wrong direction when they respond, instead of doing what they're supposed to do, which is to have a nuanced, kind of complex, well thought out, objective, surgical methodology for applying their policy decisions. And if they had that, they would have kept raising through 2018, Jason. They would have kept raising in their little quarter point, raises. 2018, 2019, the market probably would have continued to fall. But instead, what happened? They backed off the gas. the pandemic happened, you had terrible government policy wherein we shut down the entire economy. A friend of mine calls, financial terrorism. Back then, I didn't think that was necessarily true. Looking back on it now, I think he may have been right. You have this terrible government policy of shutting everything down, mixed with the idea that we don't have to face the economic consequences of that because the Fed is just going to paper over the economy and deploy trillions of dollars of liquidity, just kind of willy-nilly out there. And you know how many hundreds of billions of dollars went to waste with the PPP loans and, just going to bail out companies, and a lot of it went to high net worth individuals. And so you have this terrible idea of papering over the entire economy. And now inflation's out of control, and the Fed, they're so nervous about the inflation issue that they have said, come hell or high water, we're getting to, 4% by the end of this year, or 4.5%, whatever it's supposed to be. And so, look, what I think and what I've written about on my Substack is that I believe the consequences of, 300 basis points of hikes in the course of 9 months have not even begun to be felt yet. Leading into 2018, the end of 2018, when the market crashed in December, that was a series of small 25 basis point hikes that took place over the course of several years, right? So it wasn't like the Fed wasn't trying to shock the market. There wasn't they weren't accelerating their pace of rate hikes tremendously. It was kind of the least that they could do at, normal increments. And still, what happened? We woke up one morning in December and all of our heads were collectively sewn to the carpet, right? Like we were in deep shit and the market was crashing and everybody panicked, right? Now what we have is we have a Fed, Jason, that has raised rates 300 basis points, okay, which is far further than we took it in 2018, in like a third or a quarter of the time that it took them to get to 2.25% in 2018. So I think it took them, 2 years to get to 2.25%. Well, here we are. We have blown past that mark, and we've done it in a third of the time. Okay. And what that says to me is that we are going to wake up one day and there is going to be a crisis either in the equity markets or the credit markets, the likes of which we haven't seen before. And what most people will say is, are you accounting for all the excess liquidity from 2020? Yes, I think regardless, adjustable rate mortgages going through the roof. Mortgage rates are at 7% now. We have so much debt outstanding. So, the Fed has really painted themselves into a bad position here. And I think, the sell-off has been orderly thus far, but I do believe a moment of capitulation, serious fear, whether it's warranted or unwarranted, I believe it'll be warranted. I believe the credit markets are going to take a shit. The bond market's going to take a shit. I think we're going to have a serious moment of real panic and real capitulation, probably an order of magnitude bigger than the one they just had in England yesterday. So that's where we are. I don't know what their next move is. They're going to try to kind of ram this thing through and get to the end of the year and get us to 4%. Consequences of that, I think, are going to be devastating. It's not to say that I don't think that they're doing the right thing, because, they have to deal with this inflation issue. They created it. But, man, it's going to be a wild ride still, I think.
I think governments and central banks have way too much power and control over the money supply, interest rates, and the economy in general. But We're recording this interview on Thursday, September 29th, 2022. You brought up the Bank of England. I mean, there's limits to interest rates because of how leveraged the system is. You had about 15 years of quantitative easing, asset price inflation with the Cantillon effect, and zero interest rate policy, or ZIRP, here in the United States from the Fed. Other central banks like the European Central Bank, they actually did more bond buying for corporate debt and government bonds than the Fed did on a percentage basis. So you had all these portfolio managers at investment banks and hedge funds. They leveraged up all these bond trades. And that's why, Chris, the system is so fragile. You brought up 2019. I mean, like, I don't know if you've seen the disclosures that are coming out from Dodd-Frank from the New York Fed that have come out in the last 12 months or so, starting in November of 2021, December 2021. We're still getting some of them out about the bailouts that occurred in the 2019 repo madness crisis. But there was way too many leverage bets by Japanese investment banks, European investment banks on bond trades. So when the Fed was hiking rates, all these investment banks, these foreign investment banks, were blowing up, and the Fed actually bailed them out from the disclosures that we found out for trillions of dollars.
Well, I'm not surprised.
But the system, though, it created moral hazard. My point, though, with the governments and the central banks, when they lowered the interest rates down, you had all these managed money people, professional investors. They were just betting that the zero interest rate policy, interest rate manipulation, asset price inflation would continue almost indefinitely. So they just put on more and more leveraged trades on stocks, bonds, currencies.
Of course. I mean, that's, look, I'm sure that your listeners, because I've known you for years, I'm sure that your listeners are well aware of that already. But for the people just showing up, I mean, the idea of manipulating interest rates, and setting the price of money, of course, is going to be the defining catalyst that incentivizes behavior, right? Economic behavior. So, of course, when rates are low, and they stay low, and the Fed says that they're going to stay low, all that does is it encourages speculation and it encourages risk taking. Where in a free market, if there was too much malinvestment in the system or too much leverage or things were starting to get shaky, credit markets would start to dry up naturally on their own. And the cost of money would go up, right? The market would set interest rates higher. And that would be a signal to, borrowers, lenders, to everybody that, all right, we're coming to a time here where we need to tighten our belts a little bit, or we're coming to a point where, the economy needs to delever a little bit because there's a lot of outstanding debt. There's a lot of, when there's a lot of demand to borrow, rates, it drives the price of borrowing up. Rates go up, right? And when there isn't a lot of demand to borrow money, rates would come down ostensibly to, then entice. So the price mechanism of money, interest rates, is what dictates behavior. So what happens is when you have a central bank that sets rates low and then just keeps them there, regardless of how much risk and speculation and debt is being taken on, well, that's when you get, it's when you run into enormous problems. The gate starts to swing wildly in the wrong direction. And at, the point when the economy should be cooling off, it continues to heat up until you get this oh shit moment like the one that we're at now, where, the inflation rate is telling people, look, there's way too much hot money out there. And, coupled with a lack of supply. And then all of a sudden, but it's too little too late at those points. And that's why, watching the Fed doing what they're doing now and acting as though they're not wildly behind the eight ball is ridiculous. And so, look, the point, if you're going to buy the Keynesian line, right? The point of the central bank is supposed to be to ease the brunt of recessions and then to cool off the euphoria of booms. They're supposed to kind of maintain, homeostasis, maintain a balance between the two, but they're not. We know the way that our central bank is calibrated, because this is, human behavior, and what happens basically when you believe that you're entitled to feel comfortable all the time is they encourage and speed up all boom cycles and frantically try to avoid any bust cycles. And that's the opposite of balance. That's having, it's having all your weights on one side of the scale. And that's just going to lead to even more volatility down the road. And we're about to see it. Trust me. I feel like these next few months, next 6 months, 12 months, we're going to see some serious shit in equity markets and credit markets.
What also worries me, Chris, is if the Fed keeps hiking interest rates, and we're already seeing this now with people on their mortgage payments, the consumer is running up insane amounts of credit card debt here in the United States. And it's not for expensive discretionary items. It's just to pay their bills because of inflation and all the costs are rising. I think we're going to see a pretty big real estate bust here in the United States with home prices in the next 6 to 9 months if the Fed keeps hiking rates. What do you think about that?
I think you're right. I think to some degree, the country still isn't tapped out, right? Because if you look at like the personal savings rate and you look at things like credit card usage, okay, so you see what's happened is the free money stopped, right? So that's the first thing. The pandemic free money went away, okay? So the income stream has now dried up. So that's one negative for the consumer, right? The next thing is, so what do? The consumer turns around and dips into their savings, the money that they had saved up. Well, if you look at the personal savings rate, that too has dried up. Okay, so now that there's no savings, now what do? Well, now you start to borrow. Now you start to take on debt, and that's what's going on now. Credit card usage is going up. And so, we're unfortunately going to get to the point where people have run out of options. And that's when you see, defaults, bankruptcies, and serious economic austerity. So I think that you're right. And I think that, I think it is way more likely than not that we're going to see a pretty serious crash, not only in housing, but also in the auto market. I think it's going to get ugly.
You brought up rates going to 4%, but if you just do the math on the national debt, which is growing rapidly, the federal government can't afford 4% or 5% for very quickly. You brought up England a few minutes ago. England got to a certain level on their 30-year government debt, and it almost blew up all their portfolio managers at all their portfolio managers at investment banks, their pension funds. They needed bailouts. They had to step in and cap the yields. Do you think a similar type scenario is going to happen in the U.S., that we're going to hit a breaking point?
The only headline that I've read with regard to pension funds over the last 10 years, okay, and for those of you at home that have not been playing along, the market has done nothing but gone up over the last 10 years. Even just since March 2020, the market tripled basically off the lows it put in, or the NASDAQ, almost tripled or something perverse like that from March 2020, in the 2 years following the COVID sell-off. But the only headline I've been reading about pension funds for the last half decade has been how they cannot generate alpha, right? So you have these managers who are tasked with taking a collective pool of money that everybody has paid into and trying to get a return on it that, beats the rate of inflation, so that when benefits are eventually to be paid to the people that paid into it, the money is there and the fund is replete with enough money to do that. The only thing I've read over the last 5 years has been how these chief investment officers at, like CalPERS, for instance, which is the California pension fund for teachers and public employees, I think, how they have been unable to generate a return. Okay, while the market is screaming higher, they have been unable to generate the returns that they need. So what several funds have done, I think what they did in Chicago, and don't quote me because I'm going off an article I read probably a year ago, but I think what they did in Chicago was once they failed to meet their targets, first off, several of the funds turned over their CIOs. So I know CalPERS had like 3 chief investment officers, I think, over the last 3 or 4 years. But I think what they did in Chicago was they then issued a bond or something ridiculous to try to like put on this carry trade where, you know, we're going to pay 50 bips on the bond and then try to generate an extra, 100 bips of return with the money that some asinine, basically borrowing money to try to invest it, to try to get a return on it. The world's worst carry trade being carried out by the world's worst chief investment officers. So you have nonsense like that all throughout the system. And look, if we can't meet our obligations for pension funds throughout the United States when the market is screaming higher, what the hell are we going to do now? And I guarantee you can mark my words. Today's date is what? September 29th, 2022. You can mark my words and play this shit back, because I guarantee you there are pension funds right now already in big trouble. And we just haven't seen the headline yet. We just haven't heard the news yet. And I think there's a lot of that also going on in the crypto world right now. I think that there's a lot of crypto companies in trouble. We don't know the extent of it yet because they're going through their, PR kind of spin toolbook and, last resort kind of toolkit to shore up the situation. But I would bet dollars to donuts that there are pension funds in serious trouble in the United States right now already.
Oh, I agree. And it's not just the United States, it's Japan, it's China, it's the European Union. Obviously we know now with the United Kingdom, what's come out in the last 24 or 48 hours or so. But you brought up CalPERS. I actually did videos on this in 2019. Chris, they did worse than what you said with this kind of bullshit carry trade with issuing bonds. They issued press releases in 2019 bragging that they were the first pension fund to leverage up the balance sheet by 20%. And they were going to invest even more, basically at the top of the market. Although you had that was the repo crisis. It was shortly, I think, after the repo crisis. It was maybe towards the end of 2019. And they invested more into private equity, more into hedge funds, long short hedge funds, and more into real estate. So,
and this is what I mean. Like, they think that they're coming up with some novel idea, and I guarantee you some asshole got paid a bonus for thinking of that idea. I guarantee you somewhere along the way, some chief investment officer got paid a bonus for coming up with the novel idea, of levering up to take on more risk, to buy more equities. And those types of strategies, they're reckless in a bull market. They're catastrophic if the market collapses. And everything is in place right now for the market to collapse. Everything. We're entering a recession. Not that the stock market gives a shit about what the actual economy does anymore. Of course they are two separate entities. They haven't been very correlated anytime over the last 10 years, thanks to the central bank. But to the extent that they still are, the economy is in shambles. The economy is heading in the wrong direction. Everything is slowing. Everybody's tightening their belts. Everybody's trying to raise cash. Everybody's trying to deleverage. Companies are laying off workers. Everybody's missing earnings, right? So you have that. And then you have, you have the aftershock of a lot of these rate hikes that still haven't hit the economy yet. And, the market is just, what's sick? Like, the market now is still higher than it was pre-COVID, Okay, Jason? And pre-COVID, everybody was saying we were at some fever pitch level of euphoria in the markets, to the extent that Yellen and all these other people were saying, whoa, we better, the asset prices have kind of been elevated a little bit, or whatever they said. Remember Carl Icahn made that video about, I think asset prices are too high. That was like 2018 or 2019 or 2017 when he made that video. Okay. And the market is still higher than that. And so when you look at the market on a market cap to GDP basis, when you look at the market on a market cap to GDP basis, or on a Shiller PE basis, and you talk about reversion to the mean from where we are now, this market could easily fall another 30 to 40% from here, easily, so long as the Fed maintains its course. If the Fed starts to give the indication it's going to pivot, it's a different story. More hot money will come into the market. But if we stay the course, there's a real case for, the market almost getting cut in half from where it is today. So we haven't seen anything yet if that happens, because it's going to take the crypto world. It's going to take everything with it if that happens. And then, Jason, it's always at these points where, people that have never lived through a bear market before, they always think we've hit the bottom. Anytime the market plumbs a new low, like today, it plumbed its lowest point for 2022. And so there's, every time it hits a new low, there's a new wave of commentary that comes out suggesting that it might be over. And that happens every single time the market makes a new low. Okay. And what these assholes don't understand is it'll be the move lower 50% or 40% from here. That's what the devastation is going to look like. We may not have seen anything yet. Okay. We're talking about a Shiller PE that's still at 25 right now. Okay. This isn't blood in the streets.
And those companies have no growth. Yeah. Those companies have no growth.
This is still, the party is fucking still going on right now as if nothing has ever happened. This isn't blood in the streets. Buffett's not out there buying Occidental Petroleum at a PE of 25. He's buying it at a PE of 7 right now. Okay. When the S&P gets to a PE of 7, different discussion. Okay. That's what happened in 2008. I think it got all the way down to like 10 or 11 times future earnings or something ridiculous. That would be a 55 or 60% move lower from where we are right now. So, if the Fed holds course and you think we've seen the worst of it, you are sorely, sorely mistaken. And plan accordingly would be my non-professional advice.
Yeah, I agree. People ask me when I think the bear market in the asset prices is going to end, and I said, well, when is the Fed going to announce that the rate hikes are done and quantitative tightening is officially over? But Chris, you brought up an interesting point about asset prices. Even though we're in a bear market, asset prices are still a lot higher. Central banks, it wasn't just the United States and the Federal Reserve Bank. It was all these governments. They flooded the global economy with many trillions in new currency over the last 2.5 years. And the economy was not producing a lot of goods in the supply. So all that currency had to go somewhere. It went into asset prices.
Inflation is a monetary phenomenon, right? Which is Milton Friedman or whoever the hell said that, right? It's, inflation is the expansion of the money supply. And anybody that tells you differently is reading from, the new school book of finance that has gotten us into this mess that we're in now to begin with. So, look, it's not a coincidence that the money supply exploded and inflation is through the roof. It's just, look at what happened. Look at what happened going into COVID, right? The economy shut down. Supply chains saw complete disruption. And to the productivity that we have in the country, to the extent that we have any left, basically stopped. So there was a legitimate cutoff in supply. And at the same time, the government was paying people to stay home and to not work, right? It was, capitalism works because people get paid to be productive. Right? The point is you're producing goods or a service, and your reward is what you earn from that. The government, as it does, just decided to was paying people to stay home. The government was paying people to not be productive, which is the opposite of what makes capitalism functional. Capitalism functions because the reward for producing a good or a service is what you earn, that you can then, save and choose to use however you'd like. The government, as it does, put the wheels completely in reverse and decided to defile the corpse of whatever economic laws are left and paid people to stay home. So you had no production and no supply and a ton of new money in the system for people to bid up what few goods and services were left. And now everybody's looking around, Jason, trying to figure out why we're in an inflationary crisis. I mean, give me a break.
Yeah, I agree. And they also they forcibly shut down a lot of people's small businesses. There was a lot of hardworking, honest small business owners that had their businesses shut down.
That was like a crime against humanity. When you take a step back, and now that the cloud of fear surrounding the virus is out of the way, and you just take a step back and look at how many businesses have been shut down permanently, despite the, paycheck protection plan and all that stuff. And look, I live in Philadelphia. I walk down South Street all the time, and I see many storefronts that used to be populated with businesses that have nothing there anymore and haven't since COVID. They've just never reopened. Small businesses, boutiques, record stores, clothing shops, whatever, even restaurants, right? When you look at the amount of businesses that were forced to close and never reopen, and then you think about the fact that Walmart, Target, Home Depot, Amazon, these businesses were all allowed to continue to operate throughout the pandemic. Food stores, Kroger, the grocery store,
Costco,
they all stayed open, but the mom and pop businesses had to close down. I mean, that is like a crime against economic humanity. I don't even know what you call it. I mean, it was like a mass extermination of small businesses across the United States. It just the idea is you want somebody. Yeah, well, you want somebody at the time to at least come up with the thought of, look, people have to get their shit somewhere, and if we're going to keep Target open, why can't we keep the coffee shop on the corner open? What's the difference? There is no difference. It's like pulling the mask down to, eat in a restaurant and then putting it back up. Or, you can take your mask off when you're at the table, but you have to put it on to walk to the restroom. Like, give me a fucking break. Is anybody utilizing, more than 6 brain cells at once? Because if somebody had looked at that critically for, I don't know, more than 12 or 13 seconds, they would have immediately understood that the whole thing is a logical fallacy, and that, hey, look, maybe they would have considered the idea that instead of just doing irreparable harm to citizens that are trying to earn a living and do the right thing, maybe we just bear the brunt of the consequences of staying open together, and we tough it out together. After all, we're supposed to be a nation of rugged individuals. Obviously, we're not anymore. And so the government, of course, made things significantly worse. And so, I don't know. Does that answer your question?
Yeah, they made things a lot worse. They picked and with not just with monetary policy, they picked and choose which businesses could survive, which ones were allowed to open. Yeah. Picking and choosing winners.
And not only that, but they fired people. Okay, they fired people from their jobs for refusing to get vaccinated. They fired good people that have been working at jobs for decades because, by the way, the same government that is advocating for, a woman's right to choose because it's her body and her choice, which is fine, I'm not arguing against that, but I'm just saying, if you're going to be the government that peddles the line that it's your body and your choice, well, what about these vaccines? In that case, it wasn't your body and it wasn't your choice. You had to get it. Otherwise, they were firing people from their jobs. They were arresting people, Jason. They were beating the shit out of people in Australia. And I see videos from all over the world, people that aren't complying with, mask mandates. The police, they're tackling them. They're fucking clubbing them with billy clubs.
In China, they block people from getting food. You can't even get any.
Well, that's fucking China. Nobody should be surprised at China. But I'm saying in Australia, when you see a guy jogging through a park without a mask on and the police tackle him to the ground and beat the shit out of him, that's a huge, huge problem. And so, it's for the science, Jason. It's for your health. We're beating the shit out of you for not wearing a mask. You're 20 years old. Okay, you have less chance of dying from COVID than you do from the flu. And we're gonna stop you out in fresh air and, club your knees and beat you into a pulp because you're not abiding by what we think the narrative is this week, which of course was totally different from what the narrative was the week prior. It's just a horrifying abuse of power. And you know what? Let me just tell you something. This election they just had in Italy with this Meloni from the conservative woman who just won in Italy, this should not be a surprise. What has happened over the last 3 years with this COVID nonsense and economically, I think we're going to see similar types of election results throughout the world because I think people have just had enough. I think that we are on the doorstep of a new epoch globally. I really do. And it's moving away from globalization. It's moving away from big government. And it's moving away from liberal policies that have failed demonstrably. And Jason, when I say that they've failed demonstrably, I mean that they have failed so badly. Okay? They have failed so grossly that it is impossible for people to ignore. People can't ignore the effects of modern monetary theory when it costs them 15% more for a loaf of bread this year than it did last year. They can't ignore that. That reaches out and smacks you in the fucking face every time you do your grocery shopping. You can't ignore that. People can't ignore when there are shootings in the city, like in Philadelphia, for instance. There's been shootings in Old City, which is a very nice part of the city. Okay? The limousine liberals in Old City who live in $1 million mansions, they can't ignore the fact that all of a sudden gangbangers are starting to turn up outside their fucking driveways when that never used to happen, right? So it used to be, okay, we'll go out and, vote for the liberal mayor and vote for the liberal DA. We will trust that they are doing the ethical thing in North Philly where the problems are, all the way up way miles from me, and I will retire to my multi-million-dollar, row home in Old City and continue to eat at my fancy restaurants. Okay? Easy to ignore then. Not as easy to ignore when people are being executed, okay, a block or two from your house. And that's what's happening. And that's what's happening in Chicago, right? Look at San Francisco. San Francisco may never recover. I mean, I've watched it personally, not only in Philadelphia because I live there, but I've watched it in San Francisco. I go to San Francisco usually every year. Over the last 6 years, the difference has been extremely noticeable, to the point where I showed up, I think, in 2021, and I almost fell over because it looked so profoundly different from 2019. Everything boarded up. All the tourist areas I used to go to completely shut down. People living on the streets there, tent cities. I mean, it just looked like it looked like there was some type of, it looked like after the nuclear holocaust. It was just like a demilitarized zone. I'd never seen anything like it before. I couldn't believe it. I couldn't believe it when I saw it firsthand. People are not going to be able to ignore that. When Ken Griffin from Citadel, who's a, multi-billionaire, says to Chicago Mayor Lori Lightfoot, hey, get your shit together, or I'm taking my business and my personal income and all the tax revenue that comes with it out of Chicago. And Lori Lightfoot, I don't even know what she's doing, doesn't take that seriously, or doesn't start to implement policies to affect change. And he takes his shit and he moves it to Florida. People are not going to be able to ignore these things anymore. So you have the drastic economic problems that the country's facing, and you have basically a loss of civility and law and order throughout most of the country, coupled with the fact that, the way that the COVID lockdowns were handled kind of just infringed upon everybody's civil liberties. And so how long are people going to be expected to take this? It's so obvious that even people that lean left are noticing. When AOC wants to go on vacation and not wear a mask, Jason, she goes to Florida. She's been photographed in Florida vacationing, and then she returns back to Washington, D.C., where she proceeds to talk shit about Governor Ron DeSantis. He's doing such a bad job, Jason, that she goes to Florida to vacation.
And spends her money down there, yeah.
Exactly. This is like during the riots, following the George Floyd protests in Seattle, and there were a couple other cities where the mayors were not doing anything to prevent rioters and looters from going around causing property damage, just wreaking havoc in general. And in Seattle, it was, remember the autonomous zone. We're claiming town square as our own. Yeah, okay. Time for everybody to get fucking jobs. That's number one, but that's just my personal commentary. But do you remember when that stopped? It stopped when those same people that were out there trying to commandeer town square and mark it as their own, when they showed up at the mayor's house. Remember that? They got a little too close to the mayor's house. And then the mayor said, well, this is a real problem. We got to shut it down. Okay? So that's what I'm talking about. That's when a problem becomes too big to ignore. It's like that meme. Well, if it isn't the consequences of my own actions. And that's what we're going to see in the States. I think we are going to see an incredible, I think midterms are going to, go the way of the GOP in a big way. And I think that we're going to see similar, conservative, populist kind of nationalist movements throughout the world. Because if people have had enough with this shit, man, It started with England leaving the European Union. People have had enough. They've just had enough. It's
Well, governments are trying to take advantage of this crisis. They're talking about rolling out even faster now central bank digital currencies. I know a lot of people are against that, but if the government is working with the banks or working with large corporations or implementing a social credit score along with it, it's going to be very difficult for people to protect themselves and get out of the system, especially if you're running a normal business and you need a bank account for your business.
Right. And that just gives them more control. And it also gives them control over the velocity of money. As Andy Bernard, I was calling him Andy Bernard, as Andy Schechtman, sorry, I was just watching The Office. As Andy Schechtman, first talked to me about probably a year or two ago, the digital currency will also, not only will it allow them to track where you spend, what you spend, exactly how much you have, and kind of remove the anonymity from the current cryptocurrencies that we have now that have at least some degree of anonymity to them. But they also will then be able to control how quickly you can spend it. So if they want more or less money, they give you 500 now and say you can't spend it till 2024, or they can give you 500 now and say you got to spend it within the month or it expires. So
they can also put taxes on almost instantaneously. So if they decide that they want to add like a 20% value added tax or other taxes, they can immediately put that tax on.
Yeah. But, look, I think on a positive kind of note, I think what's just happened in Canada with them doing away with the ArriveCan app and the travel restrictions finally is proof positive that, that the citizens have the ability to make things uncomfortable enough for politicians so that they, do the right thing. At the end of the day, there's always going to be more everyday citizens than there are, government officials or, officials that the government would use to commandeer and usurp power, even, physically if need be. And I think Canada is a good example of that because that they wanted to keep that ArriveCan app forever. I know all about the ArriveCan app because I go to Canada all the time. Montreal is one of my favorite cities in the world, and I just absolutely love it. And so, it's a 45-minute flight from Philadelphia, so I'm constantly going back and forth. And even I thought that they weren't going to bow to the pressure on that. It just seemed, and the difference being, by the way, that prior to COVID, the customs agent would sometimes ask you a question or two, how long are you staying? You would do your declaration like normal when you come into the country, which is basically, are you carrying over 10 grand in cash? Have you brought any farm animals with you? And how many days do you plan on staying? And then you would go to the border agent, and the border agent would, sometimes they would ask you 10 questions. Sometimes they would ask you 0. Usually it was 1 or 2. Are you traveling by yourself? What'd you bring with you? That's that, and you're through. The ArriveCan app, they want to know what flight you came in on. They want to know what time you arrived. They want to know what time you departed. They want the exact address of where you're staying while you're there. And so it's just like a digital ledger of basically who's, coming in and out of the country. I never thought they would relinquish that. I thought, and by the way, the other thing too is nobody ever checked that app. You would show up in Canada and you would show essentially they would give you a receipt from filling it out. And basically, you had to put your proof of vaccination on there too. But there was no, first off, there was no checking the provenance or the chain of custody of your vaccination proof. You just get one of these cards, you scribble some stuff on it, and everybody would just, kind of assume that you've been vaccinated. Nobody ever called my pharmacy to check to see if they had actually, and by the way, I had the Johnson and Johnson jab. I had to get the jab because I needed to travel during COVID. I got the Johnson and Johnson one because I wasn't sold on the mRNA one. I wanted the vector variant vaccine, the traditional style one. And my vaccine card says, Janssen on it, which is the company that they made the vaccine with. And people look at the card and they look at the company, they don't even know what it is. Still to this day. I mean, I just had to show somebody the fly like 2 weeks ago. And you give it to the people that are checking you in at the airline, and they look at it, they're like, what is this? I'm like, it's the Johnson & Johnson vaccine. Oh, okay. So here we are, we're 3 years into it. People have no clue. They have no clue. And so you would fill out the app, you would put all your information in, and then you would arrive and you would show your QR code. They would give you a QR code, like with your receipt, once you put in all your trip information. And you would show the QR code to somebody, but they didn't scan it. They just looked at it. And usually some kid at the airport, some 20-year-old would line everybody up, and basically as you're walking past them, you just show them your QR code very quickly and you just breeze right past them. And then you go and do your normal declaration, talk to the customs agent if you want. So, the last half dozen times I'm traveling into Canada, I'm thinking to myself, what the hell are they even using this for? They have to just be using it for data collection. And then I was thinking like, man, this thing's probably not going to go away. They're probably going to use it just to be able to, locate everybody that comes in. And basically just, so I was stunned when they withdrew use of the app. And, I give a lot of credit to this Pierre Poilievre. I think he, has spurred a movement in Canada, and I think he could surprise a lot of people when it comes to elections. I mean, it's going to be tough, but look, we saw what just happened in Italy. You saw what happened in 2016 in the United States, and it wouldn't surprise me. The climate is ripe for somebody like Poilievre, who, to me, he comes off more like a libertarian than a neocon. I think the floor is there for him if he wants it. So I think could surprise some people.
Yeah, there's two conflicting powers. The people at the bottom, the grassroots, the small business owners, the people who maybe voted for either political party here in the United States or one political party their whole life. They're starting to really question things now. But then you have like the champagne socialist Davos crowd, and they're trying to jam even more garbage down our throats. They have all these nefarious plans, the World Economic Forum, the Great Reset. They've created, in my opinion, with a lot of bad policies, intentionally a global food and energy crisis. And then on top of that, now they're talking about central bank digital currencies. I think the food and energy crisis is really serious. It's going to last for years.
What's crazy is that the polls have kind of reversed, right? The polls, the POLES, as in like, the magnetic poles. The polls have reversed in the sense that, the Liberal Party in the United States, which used to be the party of personal freedom, is now the party that is supporting all of these draconian measures that eat away at your civil liberties. And the Conservative Party, which used to just be, I guess, they would be painted as part of the military-industrial complex. They would be painted as social conservatives and racists, or, however the media portrays them. The Conservative Party is now the party saying, we want you to have the freedom to do whatever you'd like. Like they're almost, I don't know if it's,
they're copying the libertarian party. They're copying libertarian party because
exactly.
it polls well.
Exactly. I don't know if the Conservative Party is actually like making this movement, or if it's just because the left has gone so far off the deep end, but they're adopting a libertarian mindset of sorts with a lot of things. And all of a sudden it's like, all right, well, who's really the liberal here? you know? And so there's an argument to be made on fiscal issues, which is a different argument from social issues, obviously, which is why people like myself are libertarians, because, there would be some conservatives that socially don't support same-sex marriage, don't support, abortion rights, and vice versa, and that's why I enjoy being a libertarian, because I want people to be free to do what makes them happy. I want the country to uphold its constitution, because, the founders had freedom in mind, and I want liberty and freedom for everybody. And, the nice thing is when you take a step back and you don't feel the need to interject yourselves into every social issue or, every ideological issue that has an effect on other people's lives, you just give them the space to kind of live their lives out in a way that they seem fit. And that's the beauty of libertarianism, because I sure as hell don't want people doing that to me. I don't want people telling me how to live, telling me what I can and can't do. I want there to be rule of law. I want a limited government that does serve a purpose, but other than that, that's it. I don't need to be told what to eat for breakfast. I don't need to be told, when's a good time to invest and when's not a good time to invest. I don't need to be micromanaged, and nobody else in the country really needs to be micromanaged. And if people believe that they need to be micromanaged, it's because we have gotten them accustomed to this idea that they need to. The government has kind of convinced them that they need to. And so, it's the polls have reversed. Who are the real liberals now, and who are the real conservatives? It's very fascinating to watch.
Well, Murray Rothbard actually said decades ago, when he was still alive, that the Democrats actually ripped off a lot of definitions and changed them from the libertarian. So progressive and liberal used to meant liberty or freedom. So they were anyone who was considered a liberal in the past, 100 years ago, was someone who valued personal freedoms, like what the founders wrote about with life, liberty, and the pursuit of happiness. And I think we've lost that along the way.
It's the same damn prefix. Liberal, liberty. It's the same prefix. It's the same word.
Well, the definitions have been changed now by the Democrats over the last 100 or so years. So from what libertarians had progressive first, libertarians were considered liberals first. They weren't called libertarians back then.
Right. They were traditional liberals, right?
Yeah, classical liberals or traditional liberals. Yep, classical liberalism. Well, Chris, I really enjoyed our discussion today. If my listeners want to follow you on Twitter, take a look at the QTR podcast, take a look at your articles on Substack, how did they do so?
My Substack would be my one thing that I would promote if you gave me a platform. It's quotetheraven.substack.com. I write almost daily, and so you can go there and check it out and sign up and subscribe if you like the direction I'm heading in, and with my thoughts and ideas. I'm not a financial professional, and I'm not really an expert in anything. I'm just kind of a guy trying to figure things out. So I don't make any promises, and I disclaim any inferences that the content is going to be in any way valuable because it may not be, but I do write almost daily on my Substack, and my Twitter feed is @QTR Research. And that's about it. I'm sure you can find me if need be. I really appreciate you having me on. It was pretty cool to catch up. It's been a long time. It's probably been 2 years since I talked to you. So I listened to the show, which is, it's not like I haven't heard you in 2 years, because I do listen to the show. I listen to your YouTube channel, but it's really nice to be back on, and I appreciate it.
Excellent. Well, keep up the good work. And it's not just economic analysis with you. I mean, you present the information in a way that the average person on Main Street can understand it. So it's not a bunch of gobbledygook that a PhD economist would say. I think you do a really good job at breaking it down so someone who does not have an economic or financial background or a business background can actually understand the information.
Well, that's because I am the everyday person on Main Street. You know, I live in a 400 square foot apartment. I drive a car that is badly in need of a passenger side mirror. I mean, I'm just a regular person, and I didn't set out with the intention to have a podcast or to be a finance guy. You know, I didn't give a shit about any of that stuff. But then you start learning a little bit about the macro economy and central banking, and you're forced to kind of come to this horrific realization that the whole thing is one giant Ponzi scheme being engineered and cloaked in jargon that people understand, that people don't understand, for purposes of being able to continue to, deploy these policies for benefit of people that are not the everyday people, for benefit of the elites and the rich. And it's really quite nasty. It's quite nefarious. And it's really, once you start to see it for what it is, it's really quite disgusting. And so I speak because I find it abhorrent, and because I'm genuinely interested in, identifying objective truths, helping other people maybe see things that are behind the curtain that took me a while to see. And also because I want people to bring to my attention when I might be wrong, bring to my attention perspectives that I haven't seen, bring to my attention ideas that I haven't considered, because it's all about having the open dialogue. It's all about getting all the ideas on the table and figuring out, maybe 5 years from now, Jason, I think that we're both full of shit today. I don't know. I mean, I think today me and you are doing the best. I think we're doing the best that we can to try to inform ourselves and the people around us.
I don't think we're full of shit, but I think like if the governments get more power, they're looking at like turning us into like Edward Snowden, where they shut our bank accounts down. Anyone who criticizes the government, a lot of the Davos crowd in the Western countries, in the US, European Union, they really like what the Chinese Communist Party has done with the social credit score and the crypto yuan, the digital yuan, and how cash is basically, in order to spend cash in China, you have to pull out your smartphone, scan a QR code, so the government knows where you are and that you're going to pay cash.
Well, there's always going to be a line in the sand, though. I mean, look at what happened with the farmers in the Netherlands, with the Canadian truckers. I mean, there's always going to be a line in the sand. Like, sure, they would love to have, that much power and influence and that much. And, unfortunately, we're heading down that path, right? The question is, where's that point where they're going to get as much, power as they possibly can, and then they take one step, over that line, and people start to get pissed. It's like Jordan Peterson says, right? When you want to affect change and you want to usurp power, you do it like 1 millimeter at a time, right? So that people don't notice. You don't, jump into making people horribly uncomfortable. You just kind of nudge them in the direction little by little by little. But at some point, people may very well wake up and realize, holy shit, have a look at where we are today versus where we were 10, 20, 30 years ago in terms of civil liberties. And it'll shock the shit out of people. It's like being in the ocean. When I was a kid, I would go out into the ocean in front of the hotel I was staying at when I would go on vacation with my parents, and I'd swim around a little bit, and then I'd look up, Jason, and I'd be like 5 hotels to the left, because the current had kind of pulled me off to the left, by 100 or 200 feet. And then I would realize, oh shit, I better get back towards my hotel. And, the people are going to have the same realization. At some point, they're going to look up and realize they're not in front of the civil liberty hotel that they were in front of 10, 20, 30 years ago. And they're going to say, oh, we need to take back that ground. hopefully it becomes, hopefully people understand it before it becomes impossible to take back the ground. But I don't know, man. It's a lot of times I'm thankful that I'm not going to be around at 100, 200, 300 years from now, because I don't think it's going to be good. I don't want to sound like a pessimist, but I don't know, buddy.
They're brainwashing kids in school. Yeah, it's pretty messed up what kids are learning in government schools these days. But again, Chris, I want to thank you for your time, and I'll definitely put links to Chris's Twitter and his Substack in the information and description section.